You become wealthy in your mind before you're wealthy in your bank account, which means that you're going to need to reprogram your mind if you want to become successful. And that starts by understanding the way that you look at success. Because if you see somebody who's more successful than you can have one of three reactions. Number one is you don't care. Number two is I want to achieve that same success for myself. Or number three is, I hate you because you're successful. I've been going to India pretty frequently since I was a kid, and the way that you fly to India on a lot of planes is you walk into the plane, and then you're gonna walk through first class, then you walk through business class, and then you end up in the economy section of these international planes. And when I was a kid, I used to sit in economy class. And the way that it would work is you walk through first class and you see these little cubicles where people have this whole desk, this whole bed they can lay down, and this big TV, and the people that work there are so friendly. Then you go through business class and you see the same thing. You see these really nice pods where people can sleep, where people can do their work, where people can relax, and you have this really nice airline staff. And then you end up in economy class, and now you have everybody who's sitting like sardines, and you have to sit like this for 20 hours from America to India. And the staff is typically nice, but not always the nicest. I always wondered, how do you people afford these big, nice seats? What did you do to get there? But I also noticed that other people would get very angry. It's not fair that these people have these big seats and I have to sit like a sardine in the back. It's not fair that they get to have all this nice stuff. Who are these people? These people must have done something bad. They must have done something evil. You start to create all these negative connotations because somebody has something that you don't. If you've ever said one of these three statements, I want you to stop this immediately. If you've ever said that's way too much money, or I can't afford that, or it must be nice to be able to afford that, I want you to stop saying these things immediately and change the way you speak and change the way you think. Because if you can change those two things, you change what you say, you change what you think, well, that's going to change what you do. And if you can change what you do, it's going to change what you get. And this is where now it all starts with the way we speak. Because if you keep saying, oh man, I can't afford that stuff, only rich people can have that, it's not for me. If you keep talking about money as something that you cannot obtain yourself, it is going to be impossible for you to get it, because the way you speak is also going to influence the way you think. Now it also works backwards, where the way you think influences the way that you speak, but it's easier to change what you say than it is to change what you think. And if you change what you say, it can change what you think. And if you change what you think, it's going to change what you do. And if you change what you do, it's going to change what you get. I went out to eat last week with a few of my friends at a very nice restaurant. And one of my friends there kept complaining about the price of the food. He kept talking about this cauliflower steak that cost $48. According to him, they're just cutting a slice of a piece of cauliflower. They're going to put it on the grill, flip it on the other side, and I put it on a plate and charge you $48 for this. And he kept saying about how much of a ripoff it is. After he complained about the price of the cauliflower steak for I don't know how long, and I turned to him and I said, bro, look, I never said this was a discount restaurant. Because you're not paying just for the food, you're paying for the value, you're paying for the experience, and quality things have a price. And either you pay for the quality or you don't. And if you want the quality, it's going to come at a premium price. But we all know people who have this broke mindset around us, where you're constantly complaining about the price and ignoring the value and the quality that you get. Now, you don't want to overpay for things and just throw your money places, but this is where I want you to start developing a different mindset, where you're not just focused on price, but you're rather focused on the value that you receive. Because if you're only focusing on the price, well, it's going to be very difficult for you to achieve any sort of success, because you're constantly pinching pennies because you don't want any pennies to leave. Well, at the end of the day, a penny saved is just a penny. And this is where you want to start developing the wealth mindset and try to figure out how you can achieve more. So the first thing I want you to do now is change the way that you speak, because this is the simplest thing to do. It's not easy, but it's the simplest thing to do, because if you change the way you speak, it's going to start changing the way you think. And if you can change the way you think, well, you know where this is going. So now what I want you to do is stop using these dead-end statements and turn them into more open-ended questions. I can't afford it yet, but how can I afford it? So instead of saying I can't afford it, ask how can I afford it? Instead of saying it's way too much money, ask why is it so much money? Or how can I be able to afford to pay this? Instead of saying it must be nice to be able to afford that, say I can't wait until I can afford that. Because now what you're doing is you're creating this open-ended way of thinking, because you're not just saying that you're never going to be able to do it. You're not saying that you don't have the capability to attract more money. You're now changing the way that you think, because now you're looking for ways to attract that money. This one thing of changing how you speak played a big impact on me, because I remember when I read the book Rich Dad Poor Dad by Robert Kiyosaki, that was one of the things that he talked about. He says that instead of saying, I can't afford it, ask, how can I afford it? And I started playing that back in my mind, because growing up, I kept hearing that a lot. I can't afford this, we can't afford this, that's a lot of money, we don't have money for this. These were the type of things that I grew up hearing. And when you're bred to think like that, you're told to think small, well, it becomes very difficult now for you to think bigger, because it's in your DNA to think small. But the thing that really inspired me to make this video today was a book that I'm reading right now. I'm reading a book called What Happened to You by Oprah and by Dr. Bruce Perry. And this book focuses a lot on childhood trauma and how that affects adults later on in life. That's why they say, instead of asking what's wrong with you, start asking what happened to you. And one of the things that they talk about in the book is the way that you speak to a child and how that affects them later on. And the way that I interpreted it is, we create this level of comfort as a kid, because as we're developing, as our brains are developing, what we see around us is what becomes our comfort level. If growing up we're always told that we don't have money, that we can't afford things, that things are too expensive, the rich people are evil, that becomes our level of comfort. Almost like a thing in our DNA, that this is what is normal. And then as we get older, we want to go back to our comfort level, even if that comfort level is miserable, because that's what we know to believe is comfortable. That's what we're taught our whole lives. And so now as you get older, if all you've heard is, we can't afford it, I don't have money, I can't have nice things, well, now as an adult, you continue to think that way. I can't afford it. I can't have nice things. I can't have this money. That's for rich people, and rich people are evil, and that's not something that I can have. If we're bred to think that way, well, now you're going to start living that same way, and then you're going to pass down that same way of thinking and talking down to your kids. Now, when your kids want to have nice things, what are you going to do? You're going to say the same thing that your parents said to you. We can't afford that. We can't afford to have these nice things. That's for rich people. We don't have that type of money. And now what you're doing is you're creating this generational poverty. You're creating this generational brokenness, because your parents taught you one thing. You continue to believe it because that's what you're told to think. And then you continue to spread that and pass it on. And this is where you want to be able to break it. And I know it's hard, because it gets into your DNA. It's what's comfortable. We have this comfort that we're looking for, but this is where you have to start getting uncomfortable. You hear that in the entrepreneurship space a lot, that if you want to become successful, you have to stop being so comfortable. You have to get comfortable being uncomfortable. But this is the same thing here. If you want to become successful, especially financially successful, you have to start becoming uncomfortable. And one of the ways that you can do that now is by changing the way that you think, and never, ever, ever saying that you can't afford something again. Because as soon as you say that you can't afford it, your brain stops thinking about how you're going to be able to afford it. And this is where now you got to start asking that question of, what do you have to do to be able to afford it? What videos you need to watch to learn how to attract more money? What books do you need to read to learn how to earn more money? What classes do you need to take in order to actually create more income? What coaching do you need in order to achieve the level of success that you want? What businesses do you have to do? What is it that you have to do in order to be able to achieve the success that you want in life? And as soon as you start doing that, it's going to start changing the way that you think. It's not immediate, but you have to reprogram your mind to start thinking like what wealthy people do. Because wealthy people don't sit there and say, I only made $1 million, I'll never be able to make 1.5 million. No, as soon as they start to see that success, they're going to say, all right, we made $1 million, how can we make 2 million? How can we make 10 million? How can we make 100 million? How can we make 1 billion? And it becomes more scalable, but you have to start thinking that it's possible for you. In business, there's a saying that goes, you sell the way you buy. And what that means is, if you want to sell the high-end stuff, you want to sell the luxury, the quality, the high margin, the expensive things, but then you're living a lifestyle where you're only buying the cheap, low-end, low-cost, low-value, low-service stuff, you're going to struggle trying to get by selling this high-end stuff. Because if you want to be the Rolls-Royce of the world, but you're acting like the Toyota, well, you're going to have a tough time trying to get by because now you're selling like a discount car. Now, I know Toyotas are much nicer now, but if you're selling like a Toyota when you're trying to live like a Rolls Royce, you got to understand there's a difference. And if you want to be able to sell and achieve that Rolls Royce lifestyle, you can't keep living like the Toyota. If you want to live like the Gucci, the Louis Vuitton or whatever, but you're acting like the Walmart, you got to understand that there's a discrepancy. Now, I'm not saying go and blow your money at Gucci and Louis Vuitton. But what I'm saying is you got to understand the difference between price and value and not live your life based off of price, but rather live it off of value. I don't blow my money on a lot of luxury things. To me, the brand name clothes don't matter. I don't shop at Gucci. I don't shop at Louis Vuitton. Those things don't matter to me. But I will spend money on value and quality on the things that are important to me. Things like travel. Those things are important to me, and I will spend way more money on that. I'll also spend way more money on business assets, things like coaching and consulting. I spend a lot on money on business coaching and consulting. I'm talking about hundreds of thousands of dollars a year on things that will provide me value in my business. And you got to understand now, if it's something that is providing you value, if it's something that's important to you, or if it's something that can help grow you financially, these are the things where you want to be looking for the quality. It's the thing that you want to be looking for the value, instead of just penny pinching on something that's supposed to make you a whole lot more. So now we talked about your language and the way you speak and how that impacts your success. And then we talked about value versus price and why the value that you're receiving is so much more important than the price or the cost of something. The third thing that I want to talk about is the people that you're around. Now, before I get into this, if you are an entrepreneur or if you are a business owner and you want to see how you can do better in your business and you want to see what's happening in the business economy, well, that's why I created Business Briefs. It's a completely free resource for entrepreneurs and business owners to help you be more up to date on what's happening in the business economy, because we cover things like innovation, we cover business trends, we cover what's happening in the entrepreneur and business world. That way you can spend more of your time and energy working on your business instead of just trying to understand what's happening in the business economy. Business Briefs is completely free, and if you are an entrepreneur or a business owner, I highly recommend you subscribe because there's a ton of value in there. So if you want to join Business Briefs for free, I'll put the link to how you can join down in the description below. You know, there's a saying that the average net worth of your friends is probably what you're going to have. Now, I don't think that's completely true. I think you could have friends of all different types of socioeconomic statuses, but the key is that your friends cannot sit there and bring you down for wanting to become successful. All of your friends don't have to be millionaires. All of your friends don't have to be business owners. All of your friends don't have to be super successful investors. You can have friends that you just love to have fun with, that you love to watch the game with, that you like to just hang out with, that you like to just go on walks with. There are friends that you can have that you just like spending time with. But you have to understand that there's a difference between that and your business and financial success life. Now, what you need to understand is that your friends can't be there pulling you down. They can't make you feel bad for having nice things. They can't make you feel bad for wanting nice things. They can't make you feel bad for working on your financial health. They can't make you feel bad for making financial sacrifices. They can't make you feel bad for achieving financial success. If your friends don't do these things, then they can make a good friend. But if your good friends are sitting there making you feel bad because you're becoming successful, because you have money, because you're buying nice things, because you can afford nice things, because you're making financial sacrifices, then that's when you want to start rethinking your friends. And this is where you have to understand that there's going to be people in different aspects of your life. Like, there are friends that I love to just hang out with and do dumb things with. And then there's other people that I like to talk business with. I'll talk business with my friends, but it's going to be at surface level because many of these friends are not business owners, but I love spending time with them. Now, there's other people that I will spend more time talking business with. I'm probably not going to watch the Lions game with you, but I'll spend all Monday talking business with you. That way we can see more success in my business, and that way we can work more together. And so you got to understand you're going to have people in different aspects of your life, and you don't want to just exclude people because of someone's wealth status. But this is where you got to understand that the people that you do keep in your life, they have to add value to you. If they're adding value in the sense of fun and excitement and that sort of entertainment, that's fine, but they can't pull you down in any other aspect of your life. Most people assume that if you want to become rich, what you have to do is either you're going to have to become a doctor or a high-paid professional, or you have to have this money just fall into your lap somehow. The reality, especially in our economy now, is we have so many high-paid professionals, doctors, engineers, attorneys, executives who make a big salary but are struggling financially. As soon as you make money, you have to pay half of this in taxes, and now you have to live off of what's left. And people expect that if you're a doctor or if you're a high-paid professional, that you have to look like a doctor or a high-paid professional. You gotta have the nice house, you gotta have the nice car, you gotta have those nice vacations, and that's why so many people who are high-paid professionals never have the opportunity to build wealth. The real reason why people become wealthy or don't become wealthy is not what degree you have, it's not who your parents are, it's not what job you're working, it's what you do with the money that you earn. I mean, we've made multiple videos on our channel where I talked about people who earn minimum wage. Maybe they were janitors or they worked at a parking lot and they retired with millions of dollars, while you have high-paid professionals that don't have a penny to their name. The one thing that differentiates somebody who becomes wealthy and can live the life of their dreams and somebody who cannot is your mindset. Because if you have the right mindset, if you have the right financial education, then you will have the ability to go out and take risks. You will have the ability to know what kind of risks to take, and you will have the ability to go out and do something with your money. That way you can go out and actually become wealthy. And that's why in this video, I'm going to be going over 5 lessons to understand what it takes to become wealthy. That way you can understand the difference between the rich and the poor mindset. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. And if you haven't already, be sure to join our free Discord community called the Guac Talk community. And we call it the Guac Talk community because, as we all know, extra guac is truly a symbol of extra wealth. And in this community, you can chat about all things minority mindset, from the stock market to the real estate market to the cryptocurrency market to all things building wealth. This community is completely free. And if you want to join our free Discord server, I'll put the link to where you can do that in the description below. The first thing that all wealthy people understand is the difference between an asset and a liability. Now, this might seem intuitive, but the reality is many times we don't understand what is an asset and a liability because the majority of people are buying liabilities thinking that they are assets. The way that I look at assets and liabilities is that an asset is something that puts money into your pocket, and a liability is something that takes money away from your pocket. The 3 biggest liabilities that the majority of people have that most people don't even realize that are liabilities are: 1, your house; 2, your car; and 3, your cash. So let's talk about these 3 things. Let's start by talking about your house. Everybody says that your home, the home that you live in, is your biggest investment. I mean, everybody says this. I'm a real estate agent, I'm a real estate investor, and I'm an attorney. So I've heard this from so many different angles. Every real estate agent is going to tell you that your home is an investment. Every banker is going to tell you that your home is an investment. The government is going to tell you that your home is an investment. So what do people do? Well, when people think that their home is an investment, they're going to go out and they're going to say, okay, I can comfortably afford a $300,000 home. But if my home is an investment, how about I go out and buy something a little bit bigger, a little bit nicer? So now you go out and you stretch yourself a little bit thinner, and now you go out and you buy a $400,000 home. And then as soon as you move in, you're gonna wanna renovate the kitchen, and then you're gonna wanna renovate your master bedroom, and then you're gonna wanna repaint the home, and then your furnace might break, you're gonna have to pay for that. And then a few years later, your roof is gonna start leaking, then you're gonna have to pay for a brand new roof. And so most people's homes end up becoming a money pit, because now every single month, you're paying for upgrades, you're paying for repairs, you're paying for maintenance, and this is something you have to do with your home. What I tell people is, if you're serious about becoming wealthy, before you go out and buy a home to live in, go out and buy a rental property. Because when you buy a rental property, you're gonna buy it for one sole purpose: to make money. The home that you're living in, you're not buying it to make money, you're buying it to make memories. And so now when you buy this property to make money, it's gonna be paying you with cash flow every single month, and you can use this cash flow to now pay for the home that you live in. The first property that I ever bought was a small 1,000 square foot condo, and I didn't buy it for myself to live in. I bought it to rent out to somebody else, and after all expenses, after I figured out how to do the whole real estate investing thing, this condo was paying me somewhere between $250 and $350 a month in profit each and every month, and this is cash flow that I was getting without having to do anything. So I want to own rental properties if I want an asset rather than just a home, which is a liability. Now, don't get me wrong, there's nothing wrong with owning a home, and it's better to own a home than to own nothing, but There's so much more that you can do than just thinking that you need to take all of your cash and use it to buy a home, because your home is what is going to make you wealthy. Your home is going to give you generational wealth because you own your property. This is one of the biggest lies sold to the masses, because it's an easy way to sell you to go to your bank to pull out money to go buy this property that you're going to live in, and now this home becomes a money pit for so many people. The reason why I look at your home that you live in as a liability rather than an asset is because now anytime you put $1 into renovating your property, you have to do that with after tax dollars. So you make money, you pay taxes, and then you have a little bit of money left. Now you take this little bit of money left and you're going to put that into your new kitchen. Versus with a rental property, I make money, I spend money on renovating kitchens, and then if there's any money left, that's what I pay taxes on. So you're taxed very differently. Second, the cost for you to live in your home will always keep going up, even if you don't have a mortgage, because every single year you're gonna have to pay more money to maintain your home, and your property taxes are always going to keep going up. And if you don't factor that cost into your income, well, then you could run into a problem where one day you have a fixed income, but now your property taxes go up, and now you can't afford your property, even if you don't have a mortgage, because your property taxes are so much more than what they were when you first bought your home. And third, one of the most expensive costs are missed opportunities. Because now if you take all the extra cash that you have and you use it as a down payment for your house, and you take all the extra money that you have after the end of every month and you use that to renovate your kitchen, and you use that to renovate your bathroom, and you use that to renovate your bedroom, well, now you don't have the cash to go out and invest in opportunities that might come your way, and that can be one of the most expensive costs there are, because now you're missing out on all the other opportunities. That's why I want you to invest first and buy the liability second. The second liability that keeps so many people broke is your car. Now, most people understand that your car isn't going to make you money, but what most people don't understand is how much your car is actually costing you. Because the way most people look at their car is, okay, I'm going to go out and buy myself this nice $35,000 car, and it's something that I need because I need a car to get to and from work, and it might cost me $500 a month, and then you add in your insurance and your gas and your maintenance, maybe it's going to cost you $600 a month, and this is something that you hold on to for 5 years because you're financing your car over 60 months. But what ends up happening for so many people is 5 years go by, you no longer have a monthly payment, and then instead of keeping your car, you say, this is kind of weird, I don't have any monthly payments. So then you go out, you trade in your car, and you go out and buy a new car, and you start the payments game all over again. And so now for the rest of your life, you have this car payment because this is just what's normal. Everybody has a car payment, and every few years you flip into a new car and the payments start all over again. The real cost of your car is not just that $500 that you're paying to your car company in your bank every single month. It's the missed opportunity that you could be doing with that $500. Because now, if you took that $500 a month and instead of giving it to your car company and you paid yourself, so you use this $500 and you use this money to invest. I don't care where you invested, whether it's stocks or real estate, whatever, and you can just get an average 8% return, and you do this for 50 years. Now after 50 years, your $500 monthly investment that you were given to your car company is going to be worth more than $3.5 million in your bank account. That's $3.5 million of missed opportunity that so many Americans are just throwing away because they're letting their car drive them, instead of them being able to drive a car that they can actually afford. So what I want you to do is, instead of you going out and financing a car that you can't afford, go out and buy a car with cash and take that extra cash that you're no longer giving to your car company and you're no longer giving to your bank, and take that cash and pay yourself by investing this money into yourself. Now you don't have to wait 50 years to start enjoying your money. It's just you using this money to pay for yourself, that we're not buying a whole bunch of liabilities that you cannot afford. I want you to build your wealth. Build these assets first. Real estate, stocks, build the things that are gonna pay you before you start paying everybody else. And the third biggest liability that so many people don't understand that is a liability is your cash. I grew up in a traditional Indian household. My parents are immigrants from a state in India called Punjab, and the traditional Indian mentality is a saving mentality. It's a save first mentality. And so I grew up being told that if I want to become wealthy, I need to get a high salary, I need to become a doctor, and then I need to save as much money as possible. But the reality, especially in our environment that we're facing right now, is that saving is losing. We are in an environment where money is printed like crazy. So the value of our dollars keeps getting diluted, and the value and buying power of our dollars keeps going down. So now, if you want to go out and buy something, it's going to cost you way more today than it did 10 years ago. It's going to cost you more today than it did 20 years ago. And this trend is not slowing down. So these dollars that you keep in your bank account, which are not growing, Because if you go to your banker and you ask them what interest rate they're paying you on your savings, it's going to be next to nothing. So your cash is sitting there flat. It's sitting there dead while the price of everything else keeps going up. So the value of your dollars is dropping very quickly. So what you want to do is you want to take this cash that you have and you want to put it here. You want to spend as much cash as possible. And when the majority of people hear that, what they think is, okay, well, let me go to Louis Vuitton, let me go spend my cash. But let's talk about that for a second, because one of the richest people in the world happens to be the owner of Louis Vuitton. And the reason why he became wealthy and the reason why he became one of the richest people in the world isn't because he was going out and spending all of his cash buying name brand things. It was because a whole bunch of people want to look rich, and the way they're able to do that is by giving Louis Vuitton all their money. See, Louis Vuitton for him is an asset because people buy Louis Vuitton from him. But for the majority of people, Louis Vuitton is a liability. To take one liability and they convert it for another losing liability. See, what wealthy people understand is that your cash, your savings are never going to make you wealthy. Instead, you need to understand what to do with your cash. First, you need to have some cash for an emergency. You want to have somewhere between 3 to 12 months worth of expenses sitting there. That way, if something bad happens, if you lose your job or something happens to your car, you have some cash to fall back on. This is your emergency money. Second, you want to save cash for a big purchase. You want to buy a home, you want to buy a car. This is why you should have some cash to buy these things. And third, the last reason why you should be saving cash is to buy an investment. If it doesn't fall into one of these three things, you should not be saving cash. After you hit that emergency fund, after you have cash for whatever big purchases, the rest of your cash needs to be going towards your investments. Now that doesn't mean that your money has to be invested tomorrow. That just means this money is intended to be invested. So when an investment deal comes your way, you have the cash to invest. And so now what you're doing is you're taking this liability and you're turning it into an asset. What most people do is they take this liability, cash, and they turn it into a bigger liability, Louis Vuitton. Now, again, there's nothing wrong with having liabilities. There's nothing wrong with having a nice home. Nothing wrong with having a nice car. There's nothing wrong with having Louis Vuitton as long as you can afford it. That's what I want you to understand. Wealthy people build this before they build this. They want to let their assets pay for their liabilities. The majority of the world build this so they look right, they're rich and they have nothing here. I want you to understand how money works. That means build this and let these pay for these. The second lesson that every wealthy person understands are the different phases of building wealth. When somebody has that realization that, okay, I need to be better with my money, I want to become wealthy, I want to have this financial freedom, the first thing that everybody goes through is you go through the saving phase because you realize that, hey, I need to have some extra cash. And one of the most accessible ways to have some extra cash is to stop giving all your cash away. So now what you do is you enter the saving phase. You want to know, how do you save the most money possible? You become a penny pincher. You stop going out to Starbucks. You stop buying nice things. You stop going on vacations. And this is where the majority of people get stuck. They assume that you have to keep doing this forever if you want to become wealthy. They become penny pinchers and couponers for the rest of their life, and they never want to spend a penny because they want to become wealthy. But the reality is you will never become wealthy just by saving your money, because there's a limit to how much money that you can save. If you make $50,000 a year and you are saving 50% of your income, well, now you're saving and putting inside $20,000 and you're spending $20,000. If you want to be even more aggressive, maybe you can save and put aside $25,000 and you're living off of $15,000. Maybe you can live off of just $10,000 and you can save $30,000. But there's a limit to how much you can save. But there's no limit to how much you can grow. And this is where now you got to go to the next phase. You have to know how to live below your means. If you do not know how to live below your means, if you do not know how to save your money the right way, if you do not know how to spend your money here, you will never be able to become wealthy. Because if you're able to grow your income to $1 million a year and you don't know how to manage this money, well, you're not going to stay wealthy for very long. So you got to understand how to live below your means. This is the first stage of becoming wealthy. The second thing, and very few people come to here, is you need to know how to grow your money. How do you now grow the pie? Here you're thinking, okay, I'm making $50,000 a year. How much can I put aside to start building my wealth? Here you're trying to figure out, okay, how do I go from 50,000 to $500,000? Or how do I go from 50,000 to 5 million? You're trying to grow now. So you're looking for ways to invest your money. You're looking for ways for you to increase your income. You're looking for ways to grow the money that you have. That way you have more money. That way you have the cash to invest into things that are gonna pay you with passive cash flow. That way you can have this sort of financial freedom. Once you get here, you're gonna still be making a lot of financial sacrifices, because what you're gonna realize is, hey, this making money thing is kind of fun. You're seeing how you can grow your money, and you're gonna wanna grow your money as fast as possible. So you're gonna be taking every extra penny that you have, and you're gonna wanna put it here. But eventually, you're gonna get to the point where you're gonna say, all right, I need to know how to spend my money. How do I get my time back? How do I spend my money in a way that's gonna benefit me in the most possible ways? How do I get to live my life the way I want while continuing to generate this passive income? This is where now you have to know how to spend. Very few people actually make it to this stage. Most people get stuck here. They just start becoming a couponer, they start saving pennies, but then they never realize that a penny saved is just a penny, and then they never make it here. Then some people start growing their money and they realize, hey, this is cool. I'm starting to grow my wealth. But this is where you hear of people who die with millions of dollars but never had the opportunity to actually enjoy their money because they didn't know how to spend their money. So you want to understand this and then move here and then move here. Once you start to develop that wealth, you need to know how to spend your money in a way that's going to benefit you in the most ways possible. How do you buy your time back? How do you buy the most value in your life? And how do you start enjoying your life and enjoying the money and the wealth that you work so hard to build? Now you can start buying the liabilities. Now you can start buying the nice cars. Now you can start buying the nice clothes without worrying about it. But you need to know how to spend your money the right way, because you don't want to just blow all your money, because now you're going to end up broke again. And you don't want to spend no money, because why did you work so hard to earn this money? So you need to know how to spend, you need to know how to give, and you need to know how to manage your wealth once you get to here. The third lesson that wealthy people understand that the majority of people don't is that wealthy people have a growth mindset, while the majority of people have a limited scarcity mindset. This goes back to what I was talking about earlier. See, what most people do is they make this much money and this is their expenses, and they say, okay, I want to become wealthy, so I need some extra cash. So how can I squeeze my expenses down to here? So now I have only this many expenses and I can take this extra cash and invest it. But what I want you to understand is, yeah, you got to know how to do that. But the second thing you got to do is you need to know, how do I take this income and grow it to here? Now, you can have even more expenses, but you have so much more money that you can put towards your investments, because now you're working on growing the pie instead of just trying to figure out how to squeeze another penny out of the pie. One of the things that I like to say is that a penny saved is just a penny. So you got to understand that pinching pennies has its purpose. You got to know how to live below your means, but you got to think bigger than that. You need to have this growth mindset. You need to know how to grow the pie. And the reason why this is hard for so many people is because it requires you to think different, and it requires you to spend money. Like, one of the things that we do at our business here at Minority Mindset is we're always trying to think about how can we increase our expenses. The reason being is our goal is to increase our expenses so we can increase our income. When I talk to my friends who are newer real estate investors about real estate, one of the biggest issues that all of them have is, why should I be paying a property management company $100 a month to manage this property when there's really not that much work? The tenant pays rent every single month, and yeah, you got to pay a property tax bill, and you got to make sure that the tenant pays. But what's the big deal? Why can't I just keep this money in my pocket? And then when we're hanging out on Saturday evening, they get a call from their tenant saying, hey, something's wrong with the toilet, or hey, the shower is leaking, and now my friend has to go out and they have to call their contractor. The contractor has to go to the property. The contractor is going to say, hey, it's going to cost me $350 to pay for this. Now you're going to say, oh, can you do it for $300? Now you got to deal with the contractor. The contractor is going to have to work with you as the owner to make sure that the job gets done. The tenant's going to be calling you, yelling at you because they're not happy about the time that the contractor went out there. Your tenant forgot to pay the water bill, so now you are the one that's getting the letter from the city, and you have to pay the city this back water bill if the tenant doesn't pay. And if the tenant doesn't pay his rent, now you're the one that has to deal with the eviction process. Or you can hire a property management company, pay them a little bit of money every single month, because they'll just take a percentage of whatever rental income that you're getting, and you can do none of that. And you can let the property management company deal with the headache, make sure you're getting paid, because they're experts at that. If you are a new real estate investor, you don't know the ins and outs of dealing with tenants. You don't know the ins and outs of dealing with contractors. You don't know the ins and outs of dealing with cities. And if this is what they do full time every single day, all day, you might as well pay them a little bit. That way you get their expertise, and now you got your time back, and now you can use your time to invest in more properties and to grow your portfolio. Yeah, you got to increase your expenses every time you buy more properties because now you have to pay them to manage more properties, but your goal is this. You're trying to grow the pie rather than just trying to squeeze a few pennies out of the pie. I don't manage any of my rental properties. I have a property management company that does that. They know what I want, they work with my goals, and they make that happen. And my goal is to do this. I'm trying to grow the pie instead of just trying to squeeze a few more pennies outside of it. The next thing that happens is people say, oh, well, that's easy for you to invest in real estate because you have the money to do that and you have the experience. I can't do that because I can't find a real estate property for less than $2 million. And so what are you doing? You're creating limitations for yourself. You're telling yourself that you can't do it. As soon as you tell yourself that you can't do something, I guarantee you will not be able to do it because your mind has already turned off. It stopped looking for ways to do it. So what you got to do now is you got to start looking for opportunities, because I guarantee if you spent as much time looking for opportunities as you were being a cynic, as you were hating, as you were complaining, chances are you're gonna find a whole lot more opportunities come your way. So what you can do now is start looking for opportunities maybe outside of your city. Look in the outskirts, look in a different state. There's a lot of real estate opportunities outside of just one locality. So you gotta start looking in different places and you'll be able to start finding other real estate opportunities. The next thing people say is, I don't have the money to invest in real estate. How in the world can I start investing in real estate? Again, now it goes back to, can you find this growth mindset? Can you find opportunities? The majority of people are going to sit there and complain, but you want to be the person that's finding the opportunities. When I realized that I wanted to be a real estate investor, I jumped in with both feet. I started going to real estate seminars. I joined the local real estate investor meetup in my area, and so I would start to go to these monthly or bi-monthly events. I became a real estate salesperson, and because I became a real estate salesperson, I got to meet a whole bunch of other real estate agents, and my real estate broker happened to be somebody that taught real estate investing. And so I got to know her, and so I started to get it out there, and I started to meet as many people as possible. And when I realized that I didn't have enough cash to want to buy properties because buying real estate is expensive, that's when I started looking for new ways to start generating cash. And at one of the real estate seminars that I attended, there was a couple people talking about this way that you can buy real estate with no money down, but you're not actually buying real estate. You would enter into the contract to buy a property, and then you would flip the contract to somebody else, so you have no risk, and you could walk away with a decent chunk of change in your pocket. So if there was a home on sale for $100,000, you would enter into contract to buy it for $90,000, and then you would turn around and you would sell this contract to buy the home to somebody else for $97,500. So you enter into a contract to buy it for $90,000, you sell it for $97,500, and now you sell the home, you keep the $7,500 difference, somebody buys a home for below market value, and the person that has a $100,000 home is happy because now they can finally sell the property. They've probably had the home listed for a long time and they haven't been able to sell and they need to sell, and now they finally have somebody to sell, so everybody walks away happy and you get to walk away with a big check. When I started learning about the system, I got really intrigued. The problem was, if I wanted to learn how to do this in more depth, I had to pay the teachers $3,500. And that was a lot of money for me back then, but I wanted to invest in myself. Remember, I wanted to increase my expenses, that way I could increase my income. So I invested in myself, I learned how to do it, and then I started doing this exact same thing. It's called wholesaling real estate. It took me months to get my first sale, but I made my money back many times over, and this was now cash that I could start using to buy more real estate. If you're not willing to invest in yourself, maybe it's to hire somebody who can help you grow, or maybe it's to go to a seminar, or maybe it's to buy a class, or maybe it's to buy a book. If you're not willing to invest in yourself, nobody else is going to be willing to invest in you, and then you're going to be limited right here. You have to develop this growth mindset, and you have to be willing to learn from people who are already doing it. And a lot of times it's going to come at a price. So you have to be willing to invest in yourself, invest in your own education. That way you can grow the pie into something bigger. See, the majority of people hate the idea of somebody else making a profit off of them, so they make it their mission to make sure that nobody profits off of them. I love it when people profit off of me, because if someone's profiting off of me, that means I'm getting some value. I like buying things that give me value. And I have no problem if somebody's profiting off of me as long as I'm getting some value in return. And so what I'm looking for is not what the cost is, I'm looking for the value that I'm getting in return. And this is the difference between somebody who becomes wealthy and somebody who stays broke, because if you're always worried about somebody making $1 off of you, you will never have the opportunity to go out and make $2 because people are so worried about losing $1 that they miss out on the opportunity of making $2. So what you need to do is you need to start developing this growth mindset, and instead of just looking at the price that you have to pay, start looking at the value that you're getting, because what you want to start doing is you want to think about how you can grow your pie instead of just trying to squeeze a few more pennies out of your pie. Now, before we move on to the fourth lesson that wealthy people understand, I want to remind you that if you are interested in learning more about money management and investing, we have a free guide on money management and investing that will walk you through the things that you need to do with your money. That way you can become wealthy. We'll walk you through different investing strategies, how to invest your money, and how to build your wealth. This guide is completely free when you sign up for our daily newsletter. So if you want to read a free guide, I'll put the link to how you can download it in the description below. The fourth lesson that wealthy people understand that the majority of people don't is the correlation between money and happiness. See, the majority of people put up the smoke screen because they don't have money, they don't understand money, so they say things like money doesn't matter, money can't buy happiness, you shouldn't worry about money. These are the things that I grew up hearing. But at the same time, I would see my parents go to work every single day. They would go early in the morning, they would come back late at night. I barely saw my parents when I was growing up because they were always working to make money. And this is where things didn't make sense to me. If money doesn't matter, if I shouldn't talk about money, if I'm not allowed to talk about money, why in the world are you going to work every single day just to get a paycheck? See, the first thing that you have to understand is that money itself is just a tool. It's the tool that you use to pay your bills. It's the tool that you use to fund your vacation. It's a tool that you use to live the life that you want. Money itself is not going to make you happy, but money is something that is important for you to be able to live your life, because most people are scared to say that money is important. But the reality is, if money wasn't important, you wouldn't have so many people miserable at jobs they hate, going home telling their kids that, hey, you shouldn't worry about money, just go to school, go get a degree, and go be miserable earning a paycheck doing something that you hate because money doesn't matter. But the reality is, money matters. For so many people, if you didn't have to stress about your bills, if you didn't have to worry about how you were going to fund your kids' education, if you didn't have to worry about how you're going to pay for your next vacation, if you didn't have to worry about how you're going to buy that gift that you want for your spouse, your life financially would be a whole lot easier. Now, the thing that you have to understand about money is that money is just one aspect of life. We talk about money quite a bit on our YouTube channel because, well, we teach financial education. So we focus on the money aspect, but there's a whole lot more to life than money. And you have to remember that. And you need to know how money plays a part in your life, because a lot of people get this confused. They assume that, hey, I'm miserable, I have no friends, I hate my life, but if I have $1 million, I'll be happy and I'll be able to live my dream life. And then if you ever achieve that million, you're gonna realize that now you're more miserable than you were before, because now you thought that you did what you needed to become happy, and now you don't have that happiness, and now you're gonna be even more miserable. So what you need to do is you need to know how money plays a part in your life. That way you can enjoy the wealth that you have, and that way you can use your money to amplify your happiness. There's 4 aspects to life. I call this my quadruped theory, that you have to know how each aspect of your life fits on top of one another. At the bottom of this quadruped triangle is what I call physical fitness. You have to be physically healthy. If you are on your deathbed, you don't care if you have $10 million in the bank. The only thing you want to do is be healthy. The only thing you want to do is be able to breathe. The only thing you want to do is to be able to go outside and walk again. So if you are not physically healthy, that's the first thing that you have to take care of. Because if you don't have the ability to breathe, if you don't have the ability to live your life, well, that's going to hold you back from doing anything. So you need to make sure that you're physically healthy. Then you need to make sure that you are mentally happy. So this goes to, who do you have around you? What are you doing? Are you happy right now? Because if you're depressed when you're worth $10,000, suddenly having $1 million is not going to make you not depressed. You got to take care of your mental health, and you got to invest in that. If it's going to take you $20,000 to go into rehab to get your mental life in order, go and do it. Because that's the cost that you will never be able to fix just by having more money. You need to take care of your mental health, and if this is not something that you're taking care of right now, it's not suddenly going to be fixed when you have more money. So you got to understand, you got to be physically fit, you got to be mentally fit, and then you need to be spiritually fit. Spiritual fitness doesn't mean religion. This means, what is your purpose? What is your reason for waking up in the morning every single day and wanting to conquer the day? If you don't love what you do, if you don't have a reason to get up every single morning, it doesn't matter if you got $10 million in the bank. You have no reason to get out of bed. You need to have a purpose. What is your reason for getting up every single morning? This is the reason why you're living life. You need to know this. And then once you have these 3 things, This is where financial fitness comes into play. Now, once you have this, more money can just amplify your happiness. You need to understand that money is just a tool. Money is just here, but if you don't have money, it can ruin everything else. If you don't have money, well now, it can be a lot harder for you to be spiritually fit because you can't do what you love because you gotta keep going to work every single day, making money doing something that you hate. If you don't have money, it can ruin your mental fitness because now you're stressed about your bills. You're stressed that you cannot give your wife or your husband what they want. You're stressed that you can't pay for your kids' college. This can destroy your physical health because now you're eating at McDonald's every single day. If you do not have money, it can destroy all of this, but you can't have happiness without all of this. So you need to understand how money plays a part in your life. Money is just a tool. It doesn't make you a good person, it doesn't make you a bad person, but you need to understand how money works and how money plays a part in your life. That way, you can use money to amplify your happiness. And the fifth lesson that wealthy people understand that the majority of people don't is how the wealth ladder works. See, the majority of people are focused on the corporate ladder. They want you to climb the corporate ladder, which looks like this. At the bottom, you have your laborers. These are the people that are your janitors, your cashiers, your blue-collar workers. These are the people that are earning close to minimum wage, your laborers. Above that, you have what I call your workers. These are the people that go to college and you have a nice college job. You might be an analyst. You might be one of those people that's making, your decent living. You have a good job. And now if you have this good job and you keep working up the ranks, you will make it up to the executive level. Now, we're talking about the big bucks. You're the one that's helping make the decisions for the company. You're the one that's thinking about how the company works. Your job is now to think instead of just to work and push papers. This is what most people think about when we talk about the corporate ladder. You want to go from just your laborer to a worker to the executive, to the thinker. Because what wealthy people are trying to do is they're not trying to climb this corporate ladder, they're trying to climb the wealth ladder. And so they understand what's going on here, but what they really want to do is they want to be this person right here. They want to be the owner. They want to own the corporate ladder. Just take a look at Coca-Cola. Who is the highest paid person by Coca-Cola? And most people are going to think it's the CEO, but that's not true. The person who's making more money than the CEO is the owner of Coca-Cola. In 2021, the CEO of Coca-Cola will make something around $17 million. A lot of money. His name is James Quincy, and he's gonna make a lot of money because he runs Coca-Cola. He made it all the way up here to the executive level. But the person who's making more money from Coca-Cola than the CEO is the owner, someone like Warren Buffett. He owns a lot of Coca-Cola, and in 2021, he will make something like $650 million in dividends from the Coca-Cola stock, and he didn't have to work a day at Coca-Cola. He didn't have to go out and manufacture any Coca-Cola. He didn't have to go out and tell the workers what to do. All he did is over the years, he owned and accumulated as many shares of Coca-Cola as possible, so he became one of the biggest owners of Coca-Cola, and because of that, when Coca-Cola pays out their dividends, he gets the big checks, and he's not the one that's going to work every single day to run the company. So what wealthy people are trying to do is they want to become the owners, not just of companies, but of assets. We talked about this in the first part of this video, assets versus liabilities. Wealthy people want to be the owners. They want to own the means of production. They want to own the assets. That might be owning businesses. That's what Warren Buffett does. But you can also own real estate. Real estate can pay you with cash flow every single month because if you have an apartment complex, now these tenants are going to be paying you rent to live in your property. So there's a lot of different ways that you can be an owner. You can go out and you can own other businesses that you don't have to work in physically. So you want to be the owner, not just the person climbing up the wealth ladder. Now, there's nothing wrong with working a job. Not everybody can start their own business. But what you need to do now is you got to understand, okay, if you're working to earn more money, why are you trying to earn more money? Most people want to climb this corporate ladder. That way they can go out and buy a nicer car, they can buy a bigger home, they can go on more vacations. I don't want you to think like most people. You need to think like the minority of people. When you're climbing the wealth ladder to make more money, the reason why you need to be making more money is so you can take this more money to buy more assets. When you buy more assets, these assets are going to be paying you more money every single month, and then you could take this more money that you're making from your assets to go out and buy more liabilities. So you need to know, why is it that you're earning more money? This is where so many people get it confused. So you got to understand the game. You don't want to be the person that's just climbing the corporate ladder to earn more money, to buy nice things. You want to be the person that's working hard to earn more money, to own more assets. 10 years from now, we're going to look back and you're going to see a whole new wave of millionaires that became millionaires through this economic craziness, through these volatile times, because more millionaires are made during recessions and market crashes and volatile times than any other time. And this is where now, if you are younger, if you're a millennial, what you want to be doing is you want to be looking for the right opportunities. Even if you're not a millennial, you want to be looking for the right opportunities where now you can capitalize on what's happening around you, because the reality is this next decade is going to change the landscape of our economy. It's going to change the landscape of literally how our system functions, and you are going to see some people become incredibly wealthy because of it, while other people are going to sit there and watch it happen, while other people are going to be crying that it is happening. And this is where you got to decide, which one of the three people do you want to be? Do you want to be one of those people that are just sitting there crying about how the system works? Or do you want to be one of those people that are sitting there just watching it happen? Or do you want to be one of the people that's taking advantage of the opportunity? That way, in the next 10 years, you could be one of the people that becomes wealthy because of all the craziness happening in the world. The opportunity is here, it's around us, and it's coming. And this is where now you just have to decide which one of the people that you want to be. Because if you want to be one of the people that takes advantage of the opportunity, it requires two things. One, it requires the right financial education of knowing what to do. And second, it requires you to be prepared. Because now if you're educated but you have no cash to be able to capitalize on the opportunities, well, it's going to be more difficult. Not impossible, but more difficult. So you need to be prepared, meaning have the right resources, the right education, the right cash, the right whatever it takes to go out and capitalize on the opportunities. And this is where now the financial education will help you actually do that. If you've been subscribed to my channel, you already know the difference between an asset and a liability. But let me give you a quick 15 or 30-second refresher, because an asset is something that you buy for the sole purpose of making money. This could be a stock market investment. This could be a real estate investment, not the home that you live in, but a rental property that you purchase. This could potentially be investing in a startup. This could be your own business. This could be owning physical gold. This could potentially be cryptocurrency. So an asset is something you buy for the sole purpose of making money, versus a liability is something you buy to look rich. So your liabilities are things like your Gucci, your Louis Vuitton, your cars, your vacations, anything that you're buying that isn't directly putting money in your pocket. Those things are liabilities. And while these liabilities will make you look rich, because when you have a nice car, you have the nice handbag, you have the nice stuff, you look rich, but these things are actually keeping you broke, because now you have less money to buy more assets, which actually make you richer. See, it's kind of weird, because the more assets you buy, the broker you look in the short term, but the richer you're actually becoming. Because when you're spending more money buying stocks, and you're spending more money buying real estate, and you're spending more money buying these investments, you have less money to go out and drive a fancy car. You have less money to go out and have all the nice flashy stuff, and less money to go out and go on these nice vacations today. But over time, now your assets can grow, and now you have more money to go and do whatever you want without having to go and stress about the money. See, there's nothing wrong with having nice things. I don't really care if you buy designer stuff. I don't really care if you're spending a lot of money on nice things. My worry is I want you to be able to afford it first. So now, in this economic environment that we're in right now, where we're seeing a lot of volatility, we've seen the stock market get hit, we've seen cryptocurrency get hit, we're seeing the real estate market now start to slow down, we're seeing the economy start to slow down. You have to understand that this does create opportunities. You've heard the saying that one person's trash is another person's treasure. Well, in this type of environment where people lose jobs, when assets get hurt, this is some people's trash, but it can also be your treasure if you're willing to think a little bit differently. I've talked about this in multiple interviews, but the word recession gives so many people anxiety. It causes stress. It causes a lot of just anxiousness, because you think recession, layoffs, bad things, the economy slowing. But for the minority of people, if you start to think different than the majority of people, now you can hear the word recession and hear opportunity. And this is where now you have to be able to find the right opportunity. But in order for you to do that, you got to have less money go into your liabilities. That way you have cash to actually purchase investments. Because when you have these types of slowdowns, when you have these types of volatile markets, what that means is now you're going to have some assets that go to zero. You're going to see some companies go bankrupt. You're going to see some companies go under. You're going to see some bad deals that just go and get annihilated. But what that also does is that brings the price of good assets down as well. And this is where now you can come in, find some of these good assets and purchase them at a discounted price. Think of it like Black Friday shopping for investors. Most people think of Black Friday shopping and they're going to go and buy a whole bunch of liabilities. You're going to Macy's and buying a $300 sweatshirt or jacket or whatever you're buying from Macy's. But for an investor now, what you're doing is you're finding a good asset at a discounted price. Now, this is where one, you have to have the right financial education, and two, you have to be prepared. Because now, for the majority of people, in order for you to see this opportunity, you first need to have the right financial education, because for most people, what happens is they hear crash or recession and they run away. They just start pinching their pennies, and now they get scared, and now they are all talking about how people are losing their money in the markets. People are losing their money in whatever asset class you want to talk about, so you should not buy, and which is why you want to sell at a loss and just get away from every investment possible because it's scary and things are going down. But what the minority of people are doing is they're saying, oh, you're telling me that these assets are going down? This is when I can come in and buy, because now you can buy more for the same amount of dollars that you have. You're just buying them at a discounted price. And so now you want to start thinking differently, where you want to find the discounts. You want to find the good investments that are on sale. But that again requires the financial education to find the right investments. But then two, to be able to capitalize on them, you need the cash in order to do that. Now, this is where preparing is so important, because now when times are okay, you want to be working hard to earn more money and spend less money. That way you have a margin. Because now when you have this margin, you want to be able to take this cash and put it aside. That way you can use this money to invest. Now, I'm not saying that you need to perfectly time the market. You don't have to perfectly buy at the bottom, because it's impossible to time the bottom. There's so many other factors happening in the economy that can influence when the bottom will be. So you never want to try to get into the business of trying to perfectly time the bottom. But what you can do is now you start looking for the right investments. You start looking for opportunities. Maybe you start researching stocks and you say, oh, I would love to invest in this ETF, or I would love to invest in this company. And when you see the prices of these assets go down, you can come in and buy. And you can buy them in phases. That way, if they keep going lower, you can keep buying more and buy them on the way down. So now the further down it goes, the more aggressively that you can purchase. But it requires you, again, when you go back and forth between prepared and financial education, it requires you to have the right financial education. That way you can research the right companies, because the last thing that you want to do is buy your way to zero. And so you want to be able to know what is a good investment versus what's not a good investment. And this is where now understanding how do you research a company. And you can go to a website like seekingalpha.com. You can go to Yahoo Finance. You can go to a bunch of these stock research websites and just start researching the company. Start looking at the revenues. Have they been growing? Have they been standing still? Or have they been declining a lot? Are their profits dropping? If so, why? Is it because of what's happening in the economy, or is it because the company itself is struggling? Because if a company is getting hurt due to the economic conditions, that's one thing, versus if a company is getting hurt because they're running their own company into the ground, they don't know how to create a good product, they don't know how to manage their cash flows, that's a much bigger concern. What you want to be looking for now are companies or investments that are getting hurt by the economic conditions, because the reality is we will get through this. We will enter a stronger economy sometime in the future. And this is where now, if you believe in the future of the American economy, you should believe in the future of strong assets. And this is where you can come in and find some of these strong assets at a discounted price, because when things are down, when you're in a slowing economy, when you're in a slowing market, people get scared, they want to sell, they want to run away, but it creates opportunity now for the people that think differently than the majority people. And this requires you, again, financial education and preparedness. Before I go further into how-tos of investing, if you're looking for an easy way to stay up to date on what is happening in the top finance and business news, and you just want the real news without all the fluff, without all the sensationalism, then you have to check out Market Briefs. It is a free financial newsletter that I created where every day my team is breaking down what's happening in the top finance and business news, from the stock market to the real estate market to crypto to inflation to the global economy. It is fun, easy to read. Even if you don't have any sort of financial background, it is going to be super easy for you to understand. It is a super fun read. We may keep it super light. It's funny. Well, I think it's funny. You'll see for yourself if it's funny or not, but it's fun to read, and I promise you, you are going to look forward to reading Market Briefs every morning. So if you want to join Market Briefs, it's completely free, and I'll put the link to how you can do that down in the description below. This is where most people are looking for a step-by-step guide on what do I do to become wealthy when things are bad. Now, there's a few different options that you can do, and this is going to depend on your risk tolerance and really what your goals are. If you are the type of person where you're like, I don't want to spend the time and energy researching companies. I don't want to spend all that effort trying to keep up with everything. I just want to get exposure to the markets. That way now, no matter what's happening, I will be able to benefit and I don't have to take on all the anxiety and stress. Well, if that's the type of goals that you have, well then one of the simplest things that you can do is just create a dollar cost average system where every week you're just buying a little bit more of some stocks or ETFs that you want to own. So an ETF is an exchange traded fund, and it gives you exposure to a group of stocks. So some that you can consider are ETFs that give you exposure to the S&P 500, something like VOO or SPY. Little disclaimer, I am personally invested in VOO. So you can just start investing your money into ETFs like this every single week, and now you do this whether the market is up or down, and there are apps that will completely automate this for you. That way you don't have to manually do it. And now what you're doing is now you're just getting exposure to the markets. Now whether the market's going up or down, you're getting the benefit. You can also invest in ETFs that give you exposure to emerging markets. If you're worried about inflation, you can invest in ETFs that give you exposure to innovation and technology, because that's going to be the sector that gets hit the absolute hardest as interest rates go up and as the Fed is working to fight inflation. So you got to understand kind of where you want to be and how much risk tolerance you have. I've already made a video on my channel talking about different ETFs to invest in during a recession if you're looking for specific ETFs to invest in. So if you want to go the passive way, that's what you can do. Now, if you want to be more actively involved, meaning you want to spend more time actually looking for the right investments, you want to spend more time actually keeping up with your investments, it's more risky, but you can also get better returns. Well, now what you can do is you can invest in individual companies, you can invest in real estate, you can potentially invest in cryptocurrency if that's something that you're interested in, or you can consider investing in actual businesses, startups or businesses that you can run and operate depending on how much cash you have and how involved that you want to be. Now, again, just like with everything else, what you're looking at here is a strong company that's being hit hard by the economy, because now you can come in and buy at a discount. The simplest example I can give you is back after the 2008 crash, I was buying real estate, some single family homes and apartment complexes. And what would happen with some of these apartment complexes is you have people that would get very excited and they were buying these apartment complexes with so much debt because they were trying to just manipulate the system and have 100% leverage and buy properties that they didn't know how to manage with a bunch of debt. And now they got in over their heads, and then real estate prices went down, and now they're completely underwater and the banks forced them to sell. And when the bank is forcing you to sell, you're going to sell it at a discount, especially when the market is down, because the banks want to let go of their asset as fast as possible. And so in those situations, I was able to come in and buy some of these businesses, the apartment complex, at a big discount because the banks were forcing the seller to sell cheap. And so now the whole idea is you want to find the right opportunity for you. Maybe you want to invest in real estate, maybe not. Maybe you want to invest in stocks, maybe not. Maybe you want to invest in startups, maybe not. Maybe you want to own an actual physical business, maybe not. And this is where you just want to find the right opportunity where now the business is good. The business is strong. The underlying asset is good, but the economy is pushing the price of this asset down, and this is where you can come in and buy at a discount. And so now it's all just a matter of what it is that you want to invest in, because the first asset class in any sort of market correction or slowdown that gets hit the hardest are your liquid investments, things like stocks, things like cryptocurrency. These are more volatile, and as you see more fear or panic, you can see the price of these assets get hit very hard very quickly because they're liquid. You can buy and sell a stock in a second, but it can take up to a year, if not longer sometimes, to sell some real estate, depending on what kind of real estate it is. And so you just have to understand how these different asset classes move, and you want to find the right opportunity. Now again, does this mean that you want to wait for the perfect price? No, because one day in the near future, the Federal Reserve Bank could say, you know what? We're done fighting inflation. Instead, we're going to turn around and we're going to start stimulating the economy. We're going to start doing more quantitative easing. We're going to pump up the markets. This is possible. If that happens, then you can see the price of assets shoot up. So this is where, again, not only do you want to be financially educated and prepared, but you want to understand what's happening. That way you can actually capitalize on opportunities that happen around you. Because if you're just sitting there waiting for the perfect opportunity, well, you might just see it pass by you. When the 2020 market crash happened, when the economy first shut down in March and the early part of April in 2020, we saw the market collapse. The stock market was going down at the fastest rate ever. And during that time, I was making videos. And I kept talking about how I was buying, how I didn't know how much lower the market was going to go, but I already had a list of companies I wanted to own. And now I just kept buying. And I called it drip investing, where now I'm just buying in phases. Every time I see a good investment fall by 10 to 15%, I'm coming in and buying. And if it falls by another 10 to 15%, I come in and buy more aggressively. And the comments that I kept getting were, why would you buy more? Wait until it completely collapses and then come in and buy. Or the other comments were, the whole world is ending. Why would you want to buy stocks? Why would you want to own assets? And then what happened was the Federal Reserve Bank opened up the money printer, and then we saw the stock market rally at the fastest rate ever. So this is where you don't want to try to perfectly time the market, because there are external factors outside of just our economy that can influence the price of these assets. And this is where now you want to understand how things actually work, but also understand that these types of markets and economies create more opportunities than any other time. So this is where you want to get financially educated and prepared. That way you can actually capitalize on the opportunities that come your way. If you want to buy a $1,000 laptop but you only got $100 in your bank account, no problem. Just put on 18-month 0% APR financing. If you want to buy a $30,000 car but you only make $25,000 a year, no problem. We can put you into easy credit. That way you can buy this car that's going to take you for